Hi guys, Adrian Mans from TraderInsight.com. Had a great day in the first hour trading pit today. Nothing materialized in terms of the XRVs. That's just sort of the nature of February. Don't know why that is, but it's been the case over the last couple of years. But we did have good opportunities in the 2 standard deviation opening gap reversions that I call Baltimore Chop. I had a question about one of them. This was in Avis, ticker symbol CAR. Somebody wanted to know, how did I establish the exits for that trade and what exactly were the criteria that I put in place. So let's have a quick look and I will show you just what I was looking for. Here is a chart of Avis Budget Group. You can see here that because this was a first bar criterion, right? We had a second bar entry on this one, that what I was doing was using a Fibonacci study. Now when I use a Fib study, I've told you before, I don't go from the exact peak to the trough unless I see very significant volume at those levels. And in this case, because the range of the first bar was so wide, I thought it was a good idea to just go a little bit shy. So that is why some of you had a hard time in the first hour trading pit today figuring out where I was drawing that Fib study from. But just let me show you. I just went down right below the high or the open of that bar and right above the close of that bar. That gave you about a 32.26 382 expansion. And if you remember, as the price was coming down, I said I'm going to get out in the order flow. Now, some of you like to use market orders to get in and out of these trades. I don't recommend doing that. The best practice really is to get your limit order into the order flow as you're anticipating where price is going to go. Just have your order sitting there waiting for it. Provide liquidity. Always think of trading in terms of providing or taking liquidity. You want to provide liquidity as often as you can. You'll most frequently be rewarded for that. What I've found over the years is when I put a block of shares out there and it's a long, then it'll always come up and just grab my shares, and that usually winds up being the exact high print for that move. Same thing on the low side, right? So if you're going on a short sale entry and you put your shares right in the order flow on the way to your target, much better chance of getting a favorable fill than if you go and put a market order in on the trade. Let me just show you real quickly where that left us on this one. There you go. So you can see the fills on that trade going in and popping right back out again in the second 5 minutes of the trading day. This is why we love what we do in the first hour trading pit. So by the time we were 10 minutes into the session, we had made our money on CAR, and this one wound up being a really nice trade. So I hope that answers your question about the Fib expansions. I hope that all of that makes sense. If you've taken the 2SD opening gap course, then this should be very much second nature to you. If you haven't, go ahead and click on the graphic that's popping up here, and it is going to allow you to take the course and master this material. So there you have it. If you have any other questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for tomorrow. It's the best trader education anywhere, only from TraderInsight.com.